So the very first area I want us to look at, which is a new introduction, right, to our syllabus, is this one was there before, right? But now they put it into perspective. That is the drivers of strategic objectives. Okay, so we are going to look at maximization of shareholder value, look at the balance scorecard and how it impacts shareholder value. We are going to look at what? Risk appetite and then laws and regulations. Now, a commonly held view is that the overarching strategic objective of a company should be to maximize value for its shareholders. Is it true or false?
It's true.
Yes. Now, this value typically defined as the market value of shareholders' equity, which includes two things. Now, anytime somebody buys shares from a company, right, that person actually wants two things.
The dividends and the share appreciation.
Yes.
Capital appreciation.
Yes, one, two things. So we are saying that increase in either of those two creates value for the shareholder, right? So therefore, corporate strategies are often considered successful if they lead to higher dividends, an increased share price, or both. Do you understand now? So anytime you want to maximize shareholder value, this should be your considerations. Now, I believe that even in exam, they can bring you computations. When we get to financial management, we'll look at it. But let's just look at the basis. We are saying that a person wants what? Capital growth, right? And what? And dividend yield.
Dividend yield.
Okay. Now in finance, we call this thing total shareholder return. What did I say? And there's a ratio.
Total shareholder return.
Now this total shareholder return is the sum of these two. Capital growth is our change in share price, right? Which is what? Our share price today, let's call that P1, minus our share price yesterday, all over the share price what? Yesterday, right? So basically this is the same as new minus old, all over old, times 100. You've heard it before. Now, this is the change in our capital gains. Like, that's our capital growth percentage, right? Percentage growth in your what? Your share price. I hope you all know how to calculate this already. New minus old all over old times 100, right? Okay, so we have dividend yield. Dividend yield is just our dividend today all over our share price, right? This is our dividend today all over our share price yesterday. In that, in simple terms, our total shareholder return is our share price today minus our share price yesterday, all over what? Our share price yesterday. Are you getting it? Plus our dividend today. Because it is this one over PU plus this one over PU. We put all together, this is our total shareholder return, which will be gotten in percentage. And this thing nowadays, it will be popping up anyhow. To maximize shareholder value, you must maximize your total shareholder return. Put the formula down. Let's take a small illustration and see if we can calculate total shareholder return. Is that okay? Are you putting it down?
Yes, doing so, sir.
Sir, please, so the last letter behind the formula, is it percentage or
Yeah,
is it R over something?
percentage.
Oh, okay.
So can we take the illustration I promised?
Yes,
Yes,
Prof.
please.
All right. And let's see how we can deal with this. So a company has the following information. Let's write. So I'm going to slow down, okay? Today's meeting, I will slow down for you to get it. Step by step. Let's go. So a company, I hope you can see or it's not that. Okay, so a company has the following information, right? So we have earnings, okay? So the company has earnings, Ghana cedis, and then share price. Ghana cedi. Okay, so we have year. So let's use 2019. It has earnings of 1.2 million, okay, with share price of 10 cedi per share. 2020, the share price of 12 cedis. 2021, they had earnings of 1.750, with share price being 13 cedi 20 pesos. And then 2022, we had earnings of 2 million, with share price 14.5. Okay, this is what we have. And they said it is the company's policy to retain 40% of earnings every year. Okay, every year. The company has 400,000 shares in issue. Okay, 400,000 shares in issue. Required. A, total shareholder return. Okay. I, in
Mule Beneto. Mule cover.
what's background? I in percentage. I in Ghana cedi. Okay, that is it. Then B, if Mr. Kofi has 40,000 shares outstanding, calculate his increase in wealth. So this question is worth 20 marks. Is are you there?
Almost, sir.
Once you are done,
If Mr. Kofi
has 40,000 shares, calculate his increase in wealth. So because of time, I'll only do 1 year, right? So that the rest you can do it on your own. I hope that is fine.
Yes, Prof.
Right. Because once you understand the concept, you can do the rest. Okay. This one, the whole 20 marks is for all the years, but I'm only going to do 1 year. Shall we proceed?
Yes, Prof.
Okay, so now that you have the figures, let's first see what the dividends will be. Now, you see, as a student, always your eye must be open. Look here. If a company retains 40% of their earnings as profits every year, that means how much does it pay out as dividend? That means no matter the profit after tax that you make, they are saying that you take 40% as retained earnings, right? That means how much becomes dividend?
60.
60%.
So always profit after tax is the sum of your retained earnings plus your dividends. Do you get it? That is why if you are doing changes in equity, once you take profit after tax, you less dividends. to come and get retained earnings. That is the mindset. That is why if you do this, you realize that you say what? Retained earnings, right? You've seen this before. Everybody here has seen this before. Then you say balance brought forward, right? Then you less what? You add profit after tax, not so. Then you come and less dividends. Have you seen this before? Why? Because when you take out dividends from this, you end up with the retained earnings for the year. Because profit after tax is the sum of dividends plus retained earnings. So if I deduct dividends, that means I'll be left with what? Retained earnings. Does that make sense? That is why you do this under the retained earnings account. Is it clear now?
Yes, Prof.
So if you are saying that, okay, you retain 40%, that means how much do you pay out as dividend?
60%.
Right? So that means this earnings that I see here, are the full earnings for the year, right? So if I take 40%, I'll get my earnings, but I want dividend, which will be 60%. So what do I get for my dividends? Let's get my dividend per share, right? Or if you like, you can get your earnings per share first, then you now multiply. So I'm doing for only this year. Okay, always the first year you cannot do because there's no previous year. So you look for a year where there's a previous year so that you can compare this and this, right? So now I'll use 2020. So my earnings per share that year will be what? That's my earnings attributable to the ordinary shareholders, right? Which we've been given already. That's the same as your after tax, right? Given already, divided by the number of shares, right? Outstanding. Okay. Now for 2020, we all know that what? The earnings was 1.8 million. True or false?
True.
How many shares were outstanding for the company? They said the company has 400,000 shares in issue, right?
Yes.
We divide this by the 400,000 shares. What do we have for the earnings for every share?
4.5.
4 cedis, 50 pesos.
Yes, please.
Okay, so you are saying that the earnings per share is 4 cedis, 50 pesos per share, right? Okay, we've gotten this. Now, this one, they said 40% is retained earnings, right? That means 60% is what? 60% of this will be what?
Dividends.
Dividend. So in that case, our dividend per share for that year will be what? 60% of what?
4.5.
60%. That gives me what?
2.7. 2 cedis, 70 pesos.
Okay, so you're saying it's 2 cedis, 70 pesos per share. Equally to, you could have found the dividend straight, which would have been what? This one times 60%, right? Then when you finish, you now divide by the 400. Multiplication is commutative and associative. You get the same figure. So now we've gotten the dividend per share for that period, right? Now, what do we need? We need our total shareholder return in percentage. And we know total shareholder return is given as what? Our price today minus price yesterday, not so.
Yes, sir.
All over PO plus dividend yield, right? Which was what? Our dividend today over our price yesterday, not so. Okay. So to get the percentage, that the share price last year was 12 cedis, not so. This year it is.
Yes, sir.
Last year was 10 cedis. Now it's 12.
This year. Okay.
Okay, so this minus this all over the 10 cedis, right?
Yes, sir.
Plus the dividend
0.2.
70% all over what the 10 cedis, not so. I hope you all understand. So
Yeah. Mm, 0.2 plus 0.290.
What do we get? If you need to speed up, we have
0.47.
0.47.
that's 47%. Okay, so
Hmm.
I'm saying that assuming this should have happened, shareholders' wealth would have increased by 47%, right? Do you understand? This is in percentage. In Ghana cedi, what would that be? In Ghana cedi, what would that be? Let's get so TSR in Ghana cedis. We know that in Ghana cedis, the person can get capital gains, not so, plus dividends.
Yes, sir.
Okay. How much capital gains do you get? The capital gains is what? 12 cedis minus 10 cedis. Assuming you sell the shares, he's going
Mhm.
2 cedis per share as capital gains. True or false? Then
True,
dividend
sir.
going to get 2 cedis, 70 pesos per share. True or false?
Yes, sir.
So per share, this guy is going to end up with a wealth or growth in wealth of 4 cedis, 70 pesos per share. Do you all agree?
Yes, sir.
But how many shares does the company have?
400,000 shares.
Okay, so if the growth in wealth is 4 cedis, 70 pesos, and then we have 400,000 shares, it means how much do we end up getting overall? You get it? I hope
1,960,000.
1,000,000.
960,000.
So that means the company's wealth, based on these conditions, will increase by 1,960,000. Okay, B. Let's look at Mr. Kofi's wealth. We know that Mr. Kofi, his wealth, all shareholders' wealth is now 4 cedis, 70 pesos per share, right? But Mr.
Yes, sir.
Kofi had how many shares? He bought 40,000. So Mr. Kofi,
Yes.
Mr. Kofi's wealth should increase by how much?
$188,000.
So Mr. Kofi's wealth will increase by 188,000 out of the total 1,960, right? That means out of this, Mr. Kofi's wealth is also inside. You know that, which is worth one.
Yes, sir.
Was this concept difficult? So you can practice all the years. So 2021 will be this minus 2020. 2022 will be this minus 2021, right? Then you do it. I hope it's clear. Have we understood maximizing shareholder wealth? This is the primary financial objective of every company. And then I told you to maximize it, you need two things, the growth in your share price and the growth in dividends. So when you put the two together, you get what we call total shareholder return. Is that okay?
Yes, sir.
All right. Any questions? Or we can move. Can we move? All right.
Yes, sir.
Okay, so we were here, we've understood maximizing shareholder value, but there are several challenges associated with that. Shareholder wealth maximization should be the primary financial objective of a company. Okay, sometimes there may be an issue with time period that we use to set our targets. So there's a need to determine the appropriate time frame for setting wealth maximization targets. Should these targets be short-term, medium-term, or long-term, right? Because sometimes there may be these issues. The next thing is measuring the wealth creation itself. This can be a problem. It is crucial to establish how wealth creation will be measured. Additionally, how should the target for dividend payments be balanced with those of the share price growth? Yes, we calculated it, but if you are measuring it, how would there be a balance? I mean, these things are all company policies. Even the dividend policy the company sets can affect the shareholders' wealth, right? So common dividend policies that companies can have, I believe this is spread across your syllabus, okay? A company can have a constant pattern. So let's say that if our dividends are increasing by 2 cedis per share every year, that's a constant pattern, right? A company's dividend can be a stable dividend. A stable dividend means that we can pay a dividend that does not change, right? It's stable across board, a stable percentage of profit. Now we can have what we call a haphazard pattern, right? So the dividend does not follow a specified route, okay? It is just anyhow. We can have what we call inflation-linked dividends, okay? So inflation-linked dividend means that we adjust our dividend by inflation, whether it goes up or goes down, right? Then we can have what we call a residual dividend policy, okay? That means we do all our investments, and then what is left, we use it to what? Pay dividends. I hope that is clear. So there are other theories, but this one I add it as a dividend policy. We call it a share buyback scheme. Okay. A share buyback scheme is where you feel like the company is losing control, right? Then you buy back your shares. Sometimes a company does not have, it may have extra cash, right? So instead of paying people so much dividends, it will rather buy back its shares to reduce the amount of shareholders in the company, to reduce the control. I hope that is okay. So this one, mostly in exam, they'll ask you for the advantages and disadvantages of a share buyback scheme. Then the next thing I want to talk about is what we call scrip dividends. Okay, scrip dividends act like a bonus issue or a capitalization issue. And how this one works is that I may not have money to pay dividends this year, so I'll just increase your number of shares, right? So that in the future, when I'm paying dividends or when I have enough money to pay dividends, I'll end up paying you more. Do you understand? To cover for the days I couldn't pay you. I hope that makes sense. I hope that makes sense. So 2020, I was supposed to pay you dividend on your 10,000 shares, right? Okay. So I couldn't pay dividends. So I increased your shares by 1,000. So now you have 11,000 shares, right? Okay, let's see something. If 2024, I'm paying you dividends, I should have paid dividends of, let's say, dividends of 10 pesos, right? Which would be what? 1,000 cedis. But now, since you have 11,000 shares, I will now pay you dividends of what? 1,100, right? Meaning you have covered for extra what? Dividends that you should have gotten in the previous year. Do you understand? Do you all get it?
Yes.
That is what we call a scrip dividend or a capitalization issue. Usually you see it in financial reporting as a bonus issue, right? Most of the time. But there are slight differences, don't worry. They are literally the same. So remember that your dividend policies can also affect your shareholder growth. For instance, if it's inflation linked, how would it affect your wealth creation as a shareholder? Do you understand? So these things are very important. Then sometimes the stock market and how the stock market works, right? So we call something efficient market hypothesis. So your share prices can be influenced by the general market sentiment, right? This means that short-term fluctuations in share prices might be driven more by investor attitudes by the company's than the company's actual performance. So you see this company and they say, oh, a new CEO is coming in, right? So your company, then they say Google CEO is now going to become your company CEO. Don't you think the share price will rise immediately?
Yes.
Yes, because people are driven by market sentiment, the news on the market. So all the things you are looking at, there are some particular triggers that can affect, I get it, the way a company is structured or the company's wealth. It's not always the case, right? So these are some of the things that in exam, when they ask you to criticize, you can be able to criticize. I hope that is okay. So as a result, a company's success or failure may not always be accurately reflected in its share price. So that total shareholder return, this is likely its disadvantages. Dividend policy, measuring wealth creation, the time period for certain targets for that, and stock market what? Sentiment. That's why I'm explaining it so that you write it in your own words. So let me ask you a question. What is inflation-linked dividend policy? Yes, I explained it. Oh, I explained it. So why is everybody quiet? Oh, I told you we adjust our dividends by inflation. That is it. So if inflation is going up, it depends on the policy of the organization. Okay, then what is a residual dividend policy? What is a residual dividend policy? Told you the company will do all its investment. Then whatever is left, residual and cashier, then they use that one to pay off dividends. Is that not what I said? Is that not what I said? Or you can't hear me?
Yes, bro. That's what he said.
Okay. Now, do you know that sometimes a company not paying dividends for a long time can signal to people that you are not performing well, you do not have money? Do you know that? That is what we call the signaling effect.
Signal effect.
Because sometimes, if a company fails to pay dividend for a long time, even though it is reinvesting into the business, people do not see the reinvestment because they are outside, right? But it tells them that, oh, this guy, he's not doing well. Do you get it? So that is the signaling effect. It signals to people that you may not be doing well. Okay. Another concept which I'm very concerned about is what? The dividend irrelevance theory. So Modigliani and Miller said, okay, so assuming I do not pay dividends and I reinvest into my company, definitely this thing can grow my share price, right? And it's growing my share price. I can sell the shares and still get the difference, which will be equivalent to the dividends. So in effect, dividends are not relevant. So that's what they said. Whether you reinvest or you pay out dividend, it is literally the same in context. So literally dividends actually what? Irrelevant. That is what they said, right? So these are some things that they can ask you around these areas. There are other things that I wouldn't teach you, but I want you to go and look at, which is the clientele effect and the bird in hand theory. Okay. So this is all about dividend policy
Sure.
that you need to understand. So bird in hand theory and the clientele effect. Okay. So what are some of the challenges that we encounter in maximizing shareholder wealth? The first one I would give you is what? Managers. Mostly managers want to what? Maximize their own wealth. You know that. Charlemagne for pay school fees. You understand? So agency costs may come into play, right? Because if managers are not doing the right thing, most of the time there will be a lot of agency costs. Like you will incur costs to what? Monitor them, like audits. You will incur costs for incentives for them and all that. And this one cannot maximize shareholder wealth because you are spending the excess amounts that could have been used to maximize the shareholder wealth. Does that make sense to everyone? Does that make sense to everyone?
Yeah.
Yeah, so the objective of maximizing shareholder wealth is widely accepted as a foundational principle for financial planning. However, it possesses practical challenges when it comes to setting financial performance targets and measuring actual performance against these targets. As a result, companies may adopt alternative financial objectives with the understanding that achieving these objectives would likely lead to optimal shareholder wealth growth. So what are the challenges with shareholder maximization? One, we have stakeholder considerations. Now, companies cannot solely focus on shareholders. They must also consider the needs and expectations of other stakeholders like employees, their customers, their suppliers and lenders, right? So it makes it difficult to maximize shareholder wealth when the other stakeholders are also there. Does that make sense? Because definitely customers want discounts. If you keep giving discounts to customers, will you get enough money? No, it's extra cost. You must pay your suppliers on time. If you pay them all the time, can you get money to pay dividends? I doubt. Do you understand? So these are some of the disadvantages. Then the strategic implementation may be a problem because if I have strategies, I need money to implement them. Now, if I'm implementing these strategies, then would I get enough money to pay dividends? I may not until the strategies come to fruition. Like I start getting the benefits from those strategies, it will be difficult for me to meet shareholder wealth. Does that make sense? So these are some of the disadvantages or the challenges that we encounter if we want to maximize shareholder wealth. And this one is a potential question where if they give you a case, they will ask you, why do you think the company could not maximize shareholder wealth? Maybe after calculating total shareholder wealth, they will ask you, what are the challenges? Are you getting it? And what problems do you think the company will face due to the strategy implementation and shareholder wealth? Okay, and what did we see? what did we say when it comes to shareholder maximization and strategy? What are the challenges? Before we come to the balance scorecard. Yes, what are the challenges we just saw? Please, I want the
The
meet.
stakeholder consideration.
What does that mean?
That means the company must take care of its stakeholders. When the company wants to take care of the stakeholders, cannot get money to pay the dividend for the shareholders.
Yes. That is true. And the other one was what? Strategic implementation. What does that mean?
And that they must implement their strategy. Maybe they've identified before spending any other money.
That is true. All right. So we've seen the first part. The second part is another driver of strategic objective. So the first driver of strategic objective was what? The maximization of shareholder wealth. Another thing is the balance scorecard. Now, the balance scorecard actually groups your objectives, right, into different perspectives. Okay, so the whole thing is that, let me explain this. Success for a company starts from somewhere, right? First of all, assuming I want to make 2 million Ghana cedis, and I'm a business, right? This is a financial objective, true or false?
Yeah, it's true.
Now, how do I make 2 million? Won't I have to satisfy customers before I can get that? If the customer is satisfied, is he not ready to pay me money?
Yeah.
Now, how do I make sure the customer is satisfied? I must have good internal business processes, true or false? Because
True.
of course, my discounting, my internal systems, my promptness to delivery, my quality, right? Making sure I have the right information and the right products will make the customer satisfied. Now, how do I make sure that my internal business processes are top-notch, are excellent? I must constantly innovate and grow, true or false? So the balance scorecard is not just segments in isolation, but they work together. If I do better innovation and growth, I will have increased internal business process. If I have better internal business process, I will get better customer satisfaction. If I get better customer satisfaction, then I'll increase my financial capability. True or false?
Yeah.
So I want somebody to read for us the very first paragraph. And then we move to the key concepts of the balance scorecard. Please, let's proceed.
Please, I'm reading.
Sure.
The balance scorecard is a strategic planning and management approach that helps companies develop strategies across different parts of the business, contributing cumulatively to the achievement of the overall strategic financial objective. While financial objectives are critical for commercial business, the balance scorecard emphasizes that achieving long-term financial goals also requires meeting non-financial objectives.
That is true. Now, one thing you must understand is that when you look at all these, right, which ones are financial and which ones are non-financial? You can see that the 2 million I wanted to earn was financial in nature, but these ones are non-financial. Do you understand? So the balance scorecard puts the financial and non-financial goals into perspective for us. So let's look at the key concepts of the balance scorecard. Please, you can continue.
Key concepts of the balance scorecard. 1. Multiple performance perspectives. The balance scorecard identifies several key aspects of performance referred to as perspective, for which targets should be set. This perspective may sometimes conflict with one another, as meeting a target in one area might require compromise in other. The goal is to strike a satisfactory balance among these different performance perspectives.
Yes. So one thing you should understand is that, yes, for instance, this 2 million that we want to get, definitely we'll have to do some sacrifices within, right? Like structuring our operations and all that, which also comes at a cost. So sometimes there might be what? Conflicting objectives. But the goal is to what? Try and strike a satisfactory balance among these different perspectives. Is that okay?
Yeah.
Let's
So comprehensive performance management.
Okay.
The targets set across these various perspectives collectively forms a balanced scorecard. Sorry, please let me read again. The targets set across these various perspectives collectively form a balanced scorecard. Performance should be measured against all targets on this scorecard, rather than focusing solely on financial targets or short-term results.
Yes, so that proves to us that financial targets alone will not make the company successful, right? You must make sure that all are achieved, because we said that if you constantly innovate, you have good internal processes. If you have good internal processes, it can lead to customer satisfaction. Increased customer satisfaction and loyalty can give us financial capabilities, or it can help us achieve financial breakthrough, right, in our business. So it means that if you solely focus on only the financial side, then the other bits cannot be achieved. True or false?
True.
Please, let's proceed.
Short-term and long-term integration. Although the balanced scorecard approach encourages a long-term view of performance, it is still possible to set a short-term target for each perspective. This allows companies to align the balanced scorecard with the annual budget cycle and any annual incentive scheme in place.
Yes. Now, the whole thing is that the balanced scorecard is mostly long-term, but it can be broken into shorter targets within each perspective, right? So if you are able to blend in, okay, this is what I want to do the next 5 years, but how can I break it into each year? How can I break it into each month? How can I break it into each week? How can I break it into each day? Then the organization will achieve those set targets, goals, and objectives. Is that okay? So let's look at the 4 perspectives of performance under the balanced scorecard.
So the balanced scorecard identifies critical success factors across 4 key perspectives of performance.
Okay.
Customer perspective. Focus on customer satisfaction and market share.
Right.
Internal perspective. Concentrate on internal business processes that drives efficiency and effectiveness. Innovation and learning perspective emphasizes continuous improvement and the ability to innovate. Financial perspective deals with traditional financial measures such as profitability and return on investment.
Okay. This is one of the most important models for your exam, right? Because this thing was examined in level 1, it means that every diet, they can ask you a question on the balance scorecard, whether you like it or not. This diet to come, next diet to come, the following diet can come. Okay, balance scorecard is standard because it is like the key model, right? That all other models fall under. Because if I should break this, I can get other models. Even here, I can decide to say, okay, yeah, I can get competition models from it. I can get marketing models from this, right? Internal perspective. I can get what functional strategies from this, right? I can get value chain from this, okay? I can get research, I said research, resources and capabilities, innovation and learning. I can get what? Viral. I can get, a lot of things can fall here, right? Strategic choices that can make me innovate and grow. Okay, so it's like the balance scorecard is a kin model that you can get all other models. If I want to structure all the models we have in strategic case study, they can all fall under different perspectives in the innovation and learning. I can put R&D strategy there, right? Operation strategy can go there. Marketing, all those things, it depends. Finance, all the things we looked at, right? FX, ratios, all those things, they fall here. So it's like, it is a key model that no student should be lacking the balance scorecard. If you study the performance of ICA from the very first time ICA started strategy and business management, almost every diet, there's a question on balance scorecard. So if you're a student and you do not balance scorecard, you don't know what it is. I told you anytime you are learning a model, there are some things you need to know, right? The concept, similarities, and differences
Advantages.
with other models,
Advantages and disadvantages.
right? Calculations, if any, right? Then advantages and criticisms of that model, right? If you learn any model like this for me, there's no way any question will beat you. So if I take the balance scorecard, what's the concept about? We talked about it. How is it similar to other models? So there are other models similar to the balance scorecard, performance models, plenty, but ICA focuses on what? The building blocks. Okay, when we get to business plans, we'll look at this. So the building block model by Fitzgerald and Moon. Okay, Fitzgerald and Moon. Then we have Lynch and Cross, the performance pyramid. Okay, Lynch and Cross, the performance pyramid. Okay, so this is the two other models that are similar to the balance scorecard. So it means you may go to the exam and then balance scorecard will not come. But this, either of these two models will be examined. This one is mostly used in a service-based business. And this one is mostly used in a manufacturing industry, right? Something close to manufacturing or production sort of business, right? So mostly I'm telling you this because if you go and you see a service-related business, it is likely they are going to examine the building blocks. If you go and you see a company that manufactures something, it is likely they are going to examine performance pyramid. This has been examined. This has never been examined before. Please, are you okay? So performance pyramid has never been examined. But that doesn't mean you shouldn't learn it. Now we are not taking chances, but I'm giving you everything that you need so that you prepare and prepare well. Is that okay? Now there's nothing like prediction. This is a new diet. Don't predict anything. Just learn, go and pass and go. If you start predicting, you will go and fail. I'm telling you. Are we okay? Where there are loopholes, I will tell you. This thing has not been examined before. Just take a look at it, right? What is the concept? How is it similar to other models? Is there any calculation? I'm not sure. What are the advantages and criticisms? Then you should be fine. So you see any model, concept, how does it work? What are the similarities and differences? Is there any calculation? What are the advantages and disadvantages? I believe everybody's fine. Shall we go? All right. Now, out of these four perspectives, there are three non-financial in nature. We already talked about it. And Kaplan and Norton, the creators of the balance scorecard, argued that companies should identify key performance measures and targets for each perspective. So in exam, mostly they'll tell you to come up with what? Financial outcomes. So this thing, it has come in past questions, but because we have a lot to cover, I'll not worry myself. I want us to get the perspectives very well so that when we start solving cases, I'll have a special session for solving case studies, right? Where we learn different ways of attacking case studies using headings, using bullet points and all that, right? But for now, the knowledge is the important part. So you must identify targets, and targets is where you put in that knowledge you know from accounting ratios and financial and non-financial issues into play, right? While the framework provides a guide for determining these measures, the specific metrics vary depending on the nature of the business. For instance, maybe when we take a bank, we can develop a balance scorecard for a bank. Now, that is how your exam will be coming, right? So if the company in question is a bank, the question is develop a balance scorecard for the bank. So if I take financial perspective, what should I, financial objective or financial perspective, maybe increase ROCE of the bank by maybe 10%, right? Maybe increase gross profit ratio of the bank or net operating margin by 15%. This is an example of financial objective. Or reduce the non-performing loans, right? Or collect non-performing loans, okay? All these things are examples. When I come to a customer perspective, how can I boost customers or get customer attraction? Maybe introduction of mobile feedback system, right? Instead of people coming to queue, we can introduce a mobile app. Do you guys get it? Reducing, would that help out? Reducing queues in the bank, would that help? Would that help us increase customer satisfaction?
Yes.
What else can we do? Improving customer safety. Like when somebody withdraws, there should be a security man outside. No, so security physically, the account should also be secured with a password or something, right? These things help, right? What else can we do to, as a measure of customer satisfaction for a bank? What else can we think about?
Providing what?
Giving alert messages,
Okay,
withdrawal or deposit,
so alerts and SMS.
SMS.
Emails, right? So all these things can be what? Customer feedback systems, which you can use to check. The more that they are in, the more you can get customers, right? Even recommendations, checking the amount of recommendations and reviews, right, that customers give. All these things are ways to check, right? To check whether these things are achieved, and they are all targets that you can set. And in exam, just like last night, as I told them, they can ask you to suggest more targets. Does that make sense? So let's look at internally, internal processes that the bank can put into place to ensure that in the future they can meet customer objectives. I want to put quality service delivery, right? Quality service delivery. Do you think so?
Yes.
In the bank, right? Like security, slippery floors, all those. What about employee training? Employee training, composure, and all those things. We can measure those things, right? What else can we put in the bank internally?
Enhanced salary. An enhanced salary to performing employees.
To enhance benefits. Instead of salary, let's put the benefit.
Okay. Okay.
So that one will be more about employee welfare, right?
Thank you.
Okay. You see how we are doing these things? These things, they are not difficult. But in exam, students cannot think around it. That's why I'm giving you an approach that just put yourself into the shoes of an accountant in that company and think about all these. So look at something. Mostly in exam, they'll ask you to bring a perspective and then what? The outcomes. Do you understand? So what we are suggesting are, and these are the, right? And when it comes to 20 marks, so very shocking, 10 to 20 marks, that's huge marks. No be so. I hope now when it comes, at least you can do some brackets. Can we?
Inshallah.
Can we do this? Hello.
Hi.
I believe it's clear. So you have to think about all the possible ways you can do that. And how do you do that? You can do that by reviewing more questions, right? Looking at how things work. Now, customer perspective asks what the customers value or how can I satisfy them. So by understanding what they value most, a company can focus its performance targets by satisfying them more effectively. So something like cost, offering value for money, right? 2, ensuring high standards in products or services. Place of delivery, ensuring timely and accurate delivery. These are some of the things we saw, even for the bank, right? Ensuring that the tellers are more, right? Or even if there's customer spends less time in the bank. That could be an example of what? Timely and accurate delivery. True or false?
Yes, it's true.
And when we come to internal perspective, the key question is to achieve our financial and customer objectives. What processes must we perform with excellence? So for instance, if I'm a manufacturing company, I must make sure there are no manufacturing defects. I must make sure that there are no... You get it? We have to make sure. Do you get it? We have to make sure that we meet the performance with excellence, right? So what are the key operational processes that are crucial for delivering quality products or services? Yes, management should strive for excellence in these areas. For instance, if customers value high quality service, we should ensure operational controls to prevent errors. If I'm selling goods, I should make sure that they are not rework costs, right? There's quality inspections. All these things are within the house. Employee welfare, as we said. Does that make sense? Are we okay?
Yes.
Okay. So even the way our organization is structured, where the security man will sit, where the washrooms are, all these things are internal. People actually look at. True or false? True or false?
True.
True. Now, the next thing is our innovation and learning perspective. Now, how can the organization continue to improve and create value? Okay, so the focus here is on the company's ability to maintain its competitive edge through employee skills and knowledge, right? So developing a skilled and knowledgeable workforce using new technologies, right? Innovation, creating new products and services or adopting new technologies, right? Then continuous improvement, ensuring the organization can adapt and grow in a changing environment. The next area of focus is what? The financial perspective. And how do we create value for our owners? So here is where you look at other performance measures, share price growth, profitability, total shareholder return, right? We talked about this a while ago. Return on investment, ratios. Mostly you look at how your financial aspect, cash generation, gearing, anything that is financial in nature can create or destroy value. You know that. Now, from the creators of the balanced scorecards perspective, they argue that while the financial objectives are mostly primary, long-term success requires meeting customer needs, right? And to satisfy customers, you must have efficient internal processes, right? And the efficient internal processes in turn depends on your ability to innovate and develop your workforce. You remember we talked about this. So that's what they are saying. Yes, though you have financial objectives, if you do not try to satisfy customers, put better processes in place and develop your workforce and innovate, you are going to fail. Makes sense? So there are some examples, right? Financial measures. If you go to the exam, these are the outcomes. So you go something like return on investment, you can calculate it. I get to put it there, profitability and profit growth, revenue growth, productivity and cost control, cash flow and liquidity, financial risk management. So the limits to borrowing, all the things that we listed, you can put them under the financial measures if you have data to calculate them. Do you understand? Now, when it comes to the customer measures, most of the time, things like market share and growth, customer profitability, like profit targets for different customer categories. So, okay, if I have different types, let's say in my business, I have VIP customers, right? I have VIP customers. Maybe those VIP customers, I can set targets that, okay, these people, I want to gain this amount. These people, I want to gain this amount. And what processes do you use to attract new customers? Is it through social media? Now that you'll be doing more tech-related stuff in your exam, right? We'll be focusing more on tech. Okay, there are a lot of chapters in tech, but they are not one. Every chapter has a bit of tech-related things. So now you'll be learning about AI, blue sky thinking, data analytics. I get a blockchain. We'll look at all of them and the advantages, mobile and cloud technologies, human errors. I get an IT controls and IT systems. Okay, we'll look at all that customer relationship management. So I believe when you have these techniques on your hands, when you go to the exam, case study will become a sure banker for you because already now that they are bringing online platforms, you see most of them in the case, right? With a bit of ethical twist. So we should be ready, right? So how do you attract new customers? Is it through email marketing? Is it through referrals? Is it through a landing page? Is it through a bridge page? Through paid ads? Okay, all these things are customer measures. So customer retention, customer loyalty, on-time delivery, success rate in winning contracts, right? You can think about all that. When it comes to internal measures, how are your operational controls? So how many times does the business controls fail? Have you thought about that? How many times do your business controls fail? Your production cycle time or your throughput time, amount of reworking defective units. I told you that mostly you should practice total quality management. What is the revenue per employee? How productive are your employees, right? Staff welfare, you can include all that. Then innovation and learning measures, right? Employee satisfaction, employee retention and turnover, revenue from your new products, time taken to develop new products, R&D, right? How often do you do research and development? Do you have entrepreneurs in the organization? We talk about all that, right? So in exam, it depends on the nature of the organization. The more you read, the more you are likely to think about, right? Think about the potential financial measures, customer measures, internal measures that support the particular question that you are answering, right? Now, the objectives for these different perspectives can be understood as a hierarchy. For instance, innovation and learning, you need to innovate and develop your workforce knowledge and skills. And you should set what? Critical learning skills and innovation, right? Objectives around that. Then, for example, effective and efficient operations depend on your innovative and learning categories, right? And capabilities. Then to achieve revenue and customer related objectives, you must be more efficient and have what? Effective internal operations. And to be successful financially, success in customer relationships and operational efficiency will lead to the achievement of your financial objectives. So the balance scorecard is not just a model in isolation, but all of the perspectives work hand in hand to achieve what? Those set objectives. So we saw what? The drivers of strategic objectives. We saw maximization of shareholder wealth. We have seen the balance scorecard. The next thing we have to look at is risk appetite. So what is risk appetite? So to even achieve strategy, you must consider risk, and risk is everywhere. So you must inherently accept some level of risk to achieve profit, as the possibility of making a profit often comes with the risk of incurring a loss. Now, risk appetite refers to the extent of risk that a company is willing to take in pursuit of its objectives. So the decision to take on risk is justified by management when the potential for gain outweighs the potential for loss. So the whole thing is that your appetite for risk is your what? The extent that you are willing to take in pursuit of risk. So people's appetites can be understood as the threshold of risk that your management and board of directors are expected to tolerate. And your risk appetite is mostly a product of your risk attitude. Okay, it's a product of your risk and risk attitude. I said risk appetite is a product of what? I said risk appetite is a product of what?
Risk capacity. Hey, is a product of risk attitude and risk capacity.
Risk attitude and risk capacity.
So, Charlie, I have appetite for rice today. What does that mean? It means what is your attitude towards rice and how much rice can you eat? Do you understand? Do you get the whole idea? I'm relating it to food. So, what is my attitude towards rice? I love rice. True or false? And two, how much rice can I eat? Can I eat 1 cup of rice? Can I eat 2 cups of rice? Can I eat half a cup of rice? Do you get the idea? So with risk is the same thing. Do you love risk? How much risk can you tolerate? So do you love risk? So the attitude may be that the person is a risk seeker. He likes risk a lot. Or he's risk neutral. He's in between. He doesn't really like risk, or he's risk averse, right? But there's a situational risk response, right? Which means that it depends on the situation. Everyone can take a stand, but some people are naturally risk seekers. They don't mind taking risk. There are those that do not like risk at all, and there are those in between. I get it. So some books only provide 1 and 2 because neutral is still between the two. Is that okay? Now, your capacity is your ability to take on amounts of risk. So it is up to you. If you can take on huge amounts of risk and you're a risk seeker, that defines your risk appetite, and that also defines the amount of return you can get, because there's a direct relationship between risk and return. The higher the risk, the higher the return. Do you understand? So any strategy that will involve you taking a higher risk and having low returns is a failure strategy. I want you to have this in mind, right? When you are talking in exam. So let's say that is why let's say that you have something that has a high perceived benefit. So you are getting a good benefit from it, right? And then the price is high or low. People are okay with it because at the end of the day, the benefit is high. But where the price is higher than the benefit the person is getting, do you think anybody will pay for it?
No.
Price conscious. So the same thing happens. So if it's giving me higher risk, higher return, low risk, low return, it's fine. But where the risk is high and the returns are low, nobody is prepared to deal with it. So that's an example of your capacity to attain risk, right? So risk appetite, as we were saying, right? The decision to take on the risk is justified by management when the potential for gain outweighs the potential for loss, then the people will take it out, right? Most of the time. But sometimes management imposes their risk attitude onto the shareholders, which is bad. Maybe he has seen an investment which he wants to take, but the shareholders may not like it. Are we okay? So risk appetite can be understood as a threshold of risk that the company, particularly its management and board, is prepared to tolerate. This threshold varies depending on the potential rewards and the company's strategic goals. For example, in financial markets, a trader's risk appetite must be described as the amount of capital that a trader is willing to lose in order to generate potential profit. Are we okay? Now, what are some of the things we should consider for risk appetite? Already we've talked about the components, right? That is what are the components of risk appetite?
Risk attitude and then risk capacity.
And what is risk attitude?
I don't know how to say it, but
We just learned to do. We just learned.
that's your willingness to take that thing.
Yes, your willingness is risk attitude. Your attitude towards risk, right? Your willingness. And what is risk capacity?
And how much you can take, how much you can absorb.
Yes, how much risk you can take, right? So when you are looking at risk appetite, there are also some considerations. So when you are planning or choosing your business strategies, you must evaluate the associated risk. So you can look at the amount of risk you can tolerate, right? Risk tolerance, whether the identified risk is acceptable or whether it needs to be reduced or mitigated to an acceptable level. And there's a risk map, okay? We have risk maps that we use, okay? We'll learn how to do risk mapping, or we'll learn how to use the TARA framework to risk map, right? When we get to risk management will be very interesting. We'll take some cases. So most of the time, to map a risk, it depends on two things. It depends on what? The likelihood of the risk, that is probability, and it depends on the impact or effect of the risk. Is it going to suffer the company heavily, or is just on the side, right? So the risk, depending on the probability and impact, we can either transfer the risk, we can accept the risk for what it is, we can reduce the risk, or we can avoid the risk completely, right? So it depends. That is a TARA framework. We also have another approach to do this, which is a 4T approach, which is still like TARA, but in different terms, right? So we can transfer the risk, we can tolerate the risk, which is similar to accept, tolerate it. We can reduce the risk or treat it by training staff, putting in proper controls. Then we can finally terminate the risk or avoid it, right? So these are ways we try to deal with or mitigate risk or reduce the risk to an acceptable level. Then another thing is what? Risk aversion. Okay, so risk toleration is like risk seeking, and risk aversion is risk aversion. Okay, so risk aversion means being risk averse. There are some risks that you do not want to take it, right? But there are some risks that you would want to take. So what risk are you averting and which ones are you accepting? All these things, we need to talk about them, right? But your level of risk appetite, which is like your capacity, depends on one, the nature and importance of the decision you want to take. For instance, careful assessment of okay, how much risk is acceptable? Then you also look at the potential gain or losses that you are going to get. So the magnitude of potential gain or losses actually play a crucial role in determining your risk appetite, okay? Then finally, the reliability of the information that you are given. So the decision-making process is heavily influenced by the accuracy and reliability of the information that is available to the board or management. Because remember, if you can take on something, then you must have enough information about it, whether it's going to give you a gain, I told you, whether the perceived benefits are more than the cost involved, and is this something that is worth doing? Is it life-changing opportunity? Is it something that you really need? Okay. So sometimes something may bring you a loss, but because it's a life-changing opportunity, you still have to take it, right? So these are the considerations that you have to think about in terms of your risk. appetite, right? Okay. Now, another factor that drives strategic objectives is laws and regulations. Now, these things we are looking at is very important because anytime you want to form strategy or you want to come up with a strategy, these are the things that will drive how your strategy is set. Okay, so what are the main drivers that we looked at? The first was what? Maximization of what? Of shareholder wealth, right? Then we came to look at what? Balanced scorecard considerations, true or false? Then we came to look at what? What did we look at next? It's like people are not in this class. So
As a risk
appetite.
risk appetite.
Risk.
Risk appetite.
Okay. Then the last thing that drives your strategic objective are laws and regulations. There's no way you are
Laws and
working in an
regulations,
industry
compliance.
that you will not consider laws and regulations, right? Because the laws and regulations, any strategy that you even form, let's say you are coming out with products and Food and Drugs Authority do not agree. That means you have to go back to square one, true or false? So because businesses operate within a framework of laws and regulations that vary significantly depending on the industry and locations, it's very important to consider laws and regulations as a very important driver of your strategic objectives. Is that okay? Is that okay? So while some sectors, such as food manufacturing, are subject to stringent regulations, other sectors may have fewer restrictions. So additionally, there are general laws like employment laws that apply to all businesses regardless of their industry. Another issue we should think about is regulatory complexity. Now, for multinational companies, navigating the regulatory landscape can be particularly challenging due to differences in laws and regulations across different countries. And this complexity can lead to complications in ensuring compliance in all the regions where the company operates. Okay, because every country has its own law. So multinational companies have a lot of regulatory burdens and face a lot of regulatory risks like health and safety risk, employee risk, all those things, environmental risks like the EPA, Food and Drugs Authority will be worrying you, the Forestry Authority will be worrying. So all these things are things and burdens that they mostly face, right? We'll come to environmentally driven strategies, but compliance and strategic planning should be considered, right? Companies must ensure that they comply with all relevant laws and regulations. And this compliance is not only a legal requirement, but also a critical factor in strategic planning. Business strategies and plans must be developed with consideration for the constraints and limitations that are imposed by these laws and regulations. And ignoring these legal requirements can lead to significant penalties, legal actions, and reputational damage, which can still bring you back to square one. Are we okay? So these are the drivers of strategic objectives. So who can give us a summary of the drivers of strategic objectives? How many drivers did we look at? And what are the key things that we should look out for? Yes.
That's the maximization of the shareholders' wealth.
And what did we say about maximization of shareholders' wealth? Nobody's talking. No. What did we say about that? Hey. Where is I need you? People are in the class. Or you want me to just teach and go?
No,
So please give me response.
So we said that the overall objective of the company is to maximize the shareholders' wealth,
Okay.
but there are some challenges.
Such as,
Hello.
I'm listening to your challenges.
The managers' wealth, the stakeholders' consideration, then the strategic implementation. Then we came to the balance scorecard. Then it tells us there are a group of objectives
both actually are not.
into different perspectives. Then you have the customer perspective, you have the Mm,
Internal,
somebody should continue.
Internal business
That's-
processes,
Internal business.
financial,
We have the financial, we have
innovation.
the innovative and learning. Then we move on to the risk appetite.
Risk appetite and laws and regulations, right? But you know, the most important thing about the balance scorecard is not just identifying the perspectives, but I said something important, that all the perspectives lead to each other, right? You want
they
finance,
link.
you must satisfy customers. Want customer satisfaction, you must have good internal processes. You want
Yeah.
internal processes, you must constantly build the
Yes.
skills of your staff and innovate. Is that not what we learned?
Yes.
So they link to
Yes.
each other.
Yes.
I want you to be
That brings about the hierarchy.
I want you to be proactive in answering questions, right? The most important ones, bring them up. Be confident in your answers. It is correct. I'm here to help you. So even if you say something and it's not right, we are learning. You understand? This is the same approach you use in exam. Come out, give examples. For example, if you cannot explain, you say, for example, assuming a company is a bank, I thought somebody will even use the bank example we use. That means you are listening. Sometimes I do these checks to see if you're actually listening to what I'm saying. Do you get it? Okay. Question, that's the first part. Any questions so far? Because we are going to a big area, which is corporate values and organizational culture. Corporate values and organizational culture. Write it down. Now, I'm telling you, there's a loophole. Okay, and that loophole is that now ICA's paper is going to be models. And we are looking at all the models. So we have looked at the first model, which was what? The drivers of strategic objectives. Was it last week? No, this week. I think it was Monday, right? Monday, we looked at the other model, which was strategy, the systems of strategy, the resource-based approach, all those things, right? All right. Now we're looking at corporate values and culture. Now, what are corporate values? Corporate values are the fundamental beliefs and principles that guide someone's or a company's actions and decisions. Now, these values reflect what the company stands for and influences its behavior internally and externally. So strong core values are linked to your organizational success, while weak values can lead to inconsistency and lack of direction. And because we are going into the future, we need consistency and appropriate direction. Do you understand? So mostly in a lot of questions, these are common core values that you are going to what? You are going to see. Example 1, commitment, dedication to achieving goals and fulfilling responsibilities. Why am I giving examples? Because in exam, they may tell you a company has been formed by a sole proprietor. They doesn't have any core values. Suggest some core values which should be considered for 8 marks. So this is where these things that we put down, you have to suggest them in the exam, right? So commitment, what does it mean? Dedicating yourself to achieving your goals and fulfilling responsibilities. Honesty, maintaining truthfulness and transparency in all interactions. Respect, valuing others' opinions and rights and contributions. Fairness, ensuring just and impartial treatment in decision-making. We have trust, building reliable relationships based on integrity, hard work, putting in effort and perseverance to achieve excellence. Empowerment, which is providing employees with what? With the authority and responsibility to make decisions. Then we have cost awareness, being mindful of expenditures and efficient resource use. Then we have accountability, which is taking responsibility for actions and outcomes. Creativity, which is encouraging innovative thinking and problem solving. Social responsibility, which involves contributing positively to society and the environment. We have teamwork, which is collaborating effectively to achieve common goals. We have diversity, which is embracing a range of perspectives and backgrounds, like avoiding discrimination, allowing different people to share their minds and all that. Respect for human rights, upholding and promoting fundamental human rights. Some people even have ethical commitment, right? Commitment to moral ethics and all that. So values are so open. You can think about all of them. Punctuality, honesty, think, right? I hope now you are getting the idea of values and you can suggest some. Can people give me an example of additional values? Then we move
Safety.
safety. How can you explain that? In your own words for a particular organization. Oh, I'm listening. Oh. How? Safety is in many forms. So how would you explain it? There are different kinds of safety. Are you talking
The
about?
organization must make sure that the work environment is safe for
Okay.
the employees.
Okay, so example is making people wear overalls, goggles, also, and all that. I like that. Now, corporate
Yeah.
culture. Charles Handy defined culture as the way we do things around here. The way we do things around here. So corporate culture encompasses the shared values, beliefs, ethics, and attitudes within the organization, or how a group of people or a specific organization does its things, right? It shapes how employees interact, make decisions, and perceive their roles and the organization as a whole. So a strong culture can drive performance and employee satisfaction, while a weak culture may lead to inefficiencies and low morale. So the basic thing is that as part of your strategic objectives, you must have a better culture, which is going to what? Influence the way your staff behaves. Are we okay? You go to some organizations, the employees are so zealed and ready to serve you. You go some places, it's like they want to beat you. I visited one company which I was supposed to audit, and it's like everybody there has a stern face. And I realized every Wednesday, everybody's face is just it's like everyone is annoyed. So I asked the guy, I asked the accountant, Jamal, why is it that every Wednesday all the people are frowning? And he said, it is because the owner brings some strict requirements Wednesday. Wednesday, you have to wear some specific attire, and the people do not like it. So they are always frowning. And I said, okay, that is culture. You understand? So once the leader has set in something, you cannot do away with it, but you must do something that will benefit everyone. It's not that, okay, we have to do this, so everybody should do it. Some people may not like it. So after all, if you are setting culture, it should be what? Something that will drive performance and employee satisfaction, because you are working with people. Yes, though you are the founder, you are still working with people. You must make it a little comfortable for them. Are we okay? Yeah. So what are the factors that influence organizational culture? Now, you see these things that I'm mentioning, small, as if it's joke. They are all exam questions. So you go and you see them just like how I've written them. There's a reason why I told you. So you need to really take them serious. Now, the first thing that influences the culture, I haven't put it here, it could be the organization's founder. You know, every organization's founder can be one of the reasons for influencing the culture, right? The way the founder started the company can become a culture. Do you understand? There's this company where the founder stayed hungry for days. He didn't eat the whole day before what? It's a Brazilian company. Before he started using $5, $5 became $20, and he established that big hotel. So once you're in the hotel, there's no break until 5:30 in the evening. So if you eat, you eat every food. And this, I think, is a bad culture, because founder didn't eat my consent. Founder when did and I mean Jojo. You understand? So I'm saying that when you are bringing in culture, and you know why I'm talking about some of these things, you may get a case where you'll be seeing some of these things in there. So I want to make it fun. It's like it's becoming boring. I don't like boring stuff. So let's take cases. I believe sometimes the cases, how do we say it? Like it delays us. Do you get it? That is why I'm going. But every scenario, I have cases for it. I can even bring a lot of cases. But it seems the way people are quiet, I don't like it. So let me see if I can get my applying strategic models book, and then we'll look at some cases. And you tell me what you think is not good about what is happening. So give me some few minutes. Let me see if I can find it here. If not, then. So any questions so far? What are some of the cultures you have experienced? Yes, let's share ideas. What are some of the bad cultures you've heard of or experienced among some organizations? Don't mention the organization's name, but what are some of the cultures you've or experienced? Yes.
Friday ways.
Friday way. Oh, but that one is good. People like it. I mean the bad ones.
All hospital staff should put on overall. Either you are a nurse, your accountant, you must be like a health worker. Sometimes the accountant wants to put on the coat. They said, no, you must wear some of the scrap.
You see, this one, people will not be happy with. What else?
Yeah.
What else have you encountered? Yes.
Eating in the office.
You said?
Eating in the office.
Eating in the office. But
Hey.
that one, okay. Some people may not like it, but I feel sometimes some people, they'll eat and loiter. So that one is not that bad, but well.
Yes. There's this public institution in our area. Anytime the workers got to know that the CEO is not in town, the other comes to offices very late, or some will not even come at all.
smart guys. Yeah. They will not come. The man is very bad. So they didn't put any appropriate control.
You know, it's a public sector department.
Oh, okay, it's a department.
Uh-huh.
And one other thing too, the cashier must always be in the office. People are closing, crowded there. You have to be there.
Madam.
It's a risk. You take a risk allowance.
They will not even give you that risk.
The cashier is always there. If you are going to party, the cashier is there. Go to the party.
So you have to manage. All right. So let's look at this case. We'll come and look at it in broad detail. So we'll read for us. Then let's see what some of the things, some of the weaknesses you are seeing in the culture, and then we can dive deep. So we'll read for us quick. Then we move. Frigate.
Our ladies.
Frigate Limited is based in the country of Egdon. It imports electrical components from other countries and distributes them throughout the domestic markets. The company was formed 20 years ago by Renfrew, who now owns 80% of the shares. A further 10% of the company is owned by the wife and 5% owned by his two sisters. Although he has never been in the Navy, Ron is obsessed by ships, sailing, and naval history. He is known to everyone as the commander, and this is how he expects his employees to address him. He increasingly spends time on his own boat, an expensive motor cruiser, which is moored in the local harbor 20 minutes drive away. When he is not on holidays, Ron is always at work at 8 a.m. in the morning to make sure that employees arrive on time. And he's also there at 5:30 p.m. to ensure that they do not leave early. However, he spends large parts of the working days on his boat, although he can be contacted by mobile telephone. Employees who arrive late for work have to immediately explain the circumstances to Ron. If he feels that the explanation is unacceptable, then he makes an appropriate deduction from their wages. Wages, like all costs in the company, are closely monitored by Ron. Hey, they can stay on your boots.
So what did we spot from this first paragraph? What can we say about Ron's campaign regarding his culture? Yes, everybody should talk. You don't like
authoritative.
He's authoritative. Is that all? What are some of the policies that you will not agree on? Yes.
When the company is a closed company.
Okay.
And then, like my sister said, role posture is not accommodating to the staff. Is authoritative. It doesn't open up for his employees to be engaged on.
Okay. Now you come to work at 8 o'clock. Come and check people coming in. Then you go and spend time on your boat at 5:30. Then you come back. Or you
Then
did,
come back.
then you come back to come and see those who have not left. Charlie, very strict guy. And if he feels your explanation is unacceptable, even if it's a good cause, he can still deduct from your salary. So this man is not trying at all. Anyway, that's his culture. Let's continue.
So I had a scenario at work. One day I was at work late. My son was sick, and I got to the office. They said the director was looking for me. I went, and she was like, "Why didn't you come today? If it's your work, would you have come? Would you have done that?" I said, "Madam, if it's my work, I wouldn't have even come today." But you are coming back.
Of course. Wait, you want to come back? No friend outside.
And people were like, "Hey, Pete." I said, "No, that's it." Then since then, the woman always respects me. But people be hiding behind, "Hey, my director is coming." Coming back.
Yeah, buy already. I'll go ahead and do. Me, I'm there and coming. We'll be there. I'm taking the time to come.
It's some way, some time.
How you going?
You go and sit in your PC,
Mm-hmm.
but your mind is not there.
It's true. Your mind is at home. I had an encounter, right, in one of our firms, and then one lady was pregnant too. And the lady just fell down. I think she was bleeding. And everybody, like, nobody was helping her. I was like, why? So I went to pick her up. And apparently, they don't have any contact of your relative or anyone at home who they can call. So she was just there. I had to talk to her. Then she gave me her husband's number. Then we called him. He was somewhere. He had to send someone. He was somewhere in Cote d'Ivoire. He had to send someone. The person took car, came to Accra, came to pick, and I followed them to the hospital. And I'm like, what kind of company is this? They say on their way, they don't bring any nest of kin or anybody there. So if something happens to you, nobody will even touch you. I said, wow, this is very bad culture. What do you guys think?
It's really bad.
Very bad. And they are auditors.
If you die.
They don't care about the welfare of the people.
Oh.
It means the staff themselves, they don't know their various, their colleagues' houses.
Yeah, of course. Apart from dealing within, and they use burner phones. They do investigation, so you don't use your actual phone in the office. When you go, all your phones will be put in a basket on site. Then they give you the company phones. That's what you used to call clients. Yes, and that one, I understand it. The reason is because sometimes people send sensitive information to other firms, right? So they make sure that use the company's phones. But then at least you should have information about other people's relatives or something in case something happens. So the only thing they can do is when something happens to you, worst case, you see the referees you provided on the CV. They will call them that something happened. Maybe that referee is my lecturer somewhere.
My lecturer.
Or something. It's very bad. Ghana, they have a lot of firms doing this. Me, I know. But it's wrong. At least you should know the person's friend, even if mother or something. If the woman had died that day, if I wasn't there, nobody is concerned. It was serious. And I said, wait, Ghana. Anyway, let's continue. Employees, customers, and suppliers. Who was reading?
You should read that one. Okay. Frigates currently have 25 employees, primarily undertaking sales, warehousing, account, and administration. Although employees are normally allocated to one role, they are required to work anywhere in the company as required by role. They are also expected to help run in personal tasks, such as booking holidays for his family, filing in his personal tasks, returns, and organizing social events.
This
Let's
one,
go on.
I don't like it at all. I am working in sales. Then you say, I've had this encounter where I was employed as an accountant and I went to church. It's a church setting. And then the man came and he said, why don't I sweep the whole place since nobody
Hey.
is at work yet? Why don't I sweep everywhere and tidy the place and feed the animals? If somebody is not there, why don't you do it? I'm like, really? I'm working in not even as an accountant, financial controller, and you want me to be sweeping? How? And he said, it's a church. We are doing the work of God.
It's a church, yeah.
Everybody can do it. Really. So if they come and they see that the financial controller is sweeping, feeding the animals, cleaning the floor, how would they respect him? For me,
But our churches don't respect the other workers. They respect only the successful.
You see, some of these things, people should really, it affects a lot of employees. So. It affects employees. They say, if you come to that church, you can't go to any other church again. You have to stop your old church because they'll provide you. It's very bad. You can't go home. They'll give you accommodation there. I didn't spend 2 days there. I left. But the salary was very good. I mean, as at that time, the salary was almost 12,000 those times.
Hey.
But I left. Oh, I can't be. I mean, I don't like pressure. I left. I didn't even spend 2 days there.
All employees at Frigate Limited are only given a minimum holiday allocation. They have to use this allocation not only for holidays, but also for events such as visiting the doctor, attending funerals, and dealing with domestic problems and emergencies. Ron is particularly inflexible about holidays and work hours. He has even turned down requests for unpaid leaves. In contrast, Ron is often away from work for long periods, sailing in various parts of the world. Ron is increasingly critical of suppliers, trying to sell me inferior quality goods for higher prices. That's okay. Customers mourning about prices and paying later and later. And society, hey, where they mean to be kindly you. Let me take the brackets off.
Let me take it. It says Ron is increasingly critical of suppliers. That means this is how Ron thinks. Like the suppliers are trying to sell him inferior quality goods for higher prices. Customers are always complaining about his prices. They want to be paying later and later. And the society, are you getting it? There's a period working in the Navy that will do everyone good, right? He thinks that people in the society should go and work in the Navy so that it will help them check their attitude. But he himself, has he worked in the Navy before?
No.
You see, that is what they are saying. And he has also been in dispute with the tax authority, who he accused of squandering his hard-earned money. This man, Nankasana. An investigation by the tax authority led to him being fined for not disclosing the fact that significant family expenditure, such as a holiday for his daughters overseas, has been declared as company expenditure. It's not wholly exclusively and necessarily incurred. This money, they live the life, oh, Charlie. Company accountant. It was this action by the tax authority that prompted Ron to appoint Anne Lee as the company accountant. Anne had previously worked as an accountant in a number of public sector organizations, culminating in a role as a compliance officer in the tax authority itself. Ron felt that recruiting someone like Anne should help the tax authorities, keep the tax authorities happy. After all, she is one of them. Anne was used to working in organizations which had formal organization hierarchies, specialized roles, and formal controls and systems. She tried to install such formal arrangements with Frigate. As she said to Ron, we cannot have everyone working as if they were just your personal assistants. We need structure, standardized processes, and accountability. Ron resisted her plans at first, though, delaying tactics and then through explicit opposition, tearing up her proposed organizational chart and budget in front of the other employees. Oh, Ron no try. I regret the day I ever made that appointment, he said. After 6 months, he terminated her contract and returned to the tax authority as a tax inspector. So, Somebody said, what did we spot about Ron's company's culture? I mean, identify the weaknesses first. I haven't taught you cultural web yet, but identify the weaknesses that you see there. Who was the culture shaped around, and what factors can we say are influencing the culture of Frigate? You see, this is how the question will come. And when we go back to our notes, before we proceed, let's spot if some of these things are there. I mean, okay, these are the factors, and we'll come back to Ron. So the organization's structure and size can affect its culture. Okay, so small organizations usually have a strong culture due to close-knit teams and shared experiences. Organizations may experience challenges in maintaining a consistent culture across various locations and departments. Then we have what? We have leadership. Leaders play a critical role in shaping and communicating the company's culture. So their values and actions set an example and influence the overall organizational environment. So effective leaders align the company's culture with their strategic goals and values. The location can influence culture, the business environment, the events, okay, the office layout can influence the culture, the type of staff you employ can influence the culture. You know that, right? All these things are factors that can influence culture. So based on Ron, what are some of the issues we spotted when it came to Ron's culture? Yes, that you think are bad or needs to be worked on. Yes. Well, what were some of the issues in Frigate that we saw that you think we can work on effectively?
There are no organizational structures.
Okay. Okay, I'll take it. Yes, any other? I want everyone to talk.
Raw business is a small business that evolved around he himself, he alone, and the family.
Okay.
So he doesn't really care for the welfare of his staff.
Okay. I'll take
Whatever
it.
the staff,
Whatever.
The staff benefits, he doesn't care about the staff welfare and benefits.
He uses the company money for his own personal expenses.
Okay. What else did we spot again? I mean, we have a lot of people on the call, but it's the same voices I keep hearing over and over again.
Raw is inflexible.
Then he is not filing the right tax.
Okay.
He's stealing government.
He's killing that. Yes, what else did we see?
He did not put qualified and competent people in their respective roles. Because I cannot imagine somebody being an accountant. You ask the next day, following day, you ask the person to take a different role. That will not bring growth to the company. And the individual will not have the work apathy to work for the company.
Yes, that is true.
Employees are not working in a conducive environment.
Yes. And also, even when people ask for unpaid holidays, he doesn't give them. No, it's so bad. So if an unfortunate event happens, that means you have to go home. He will sack you because you cannot tolerate. I believe most of his employees would have left by now. Because I'm sure he's not the only business in Egdon. Me, I'll leave. Because even when it's holiday, he doesn't give them that full holiday. But he comes to work at 8 o'clock, we leave and go and cruise. Come back at 5:30 when we have closed to make sure that people do not leave on time. This is a bad guy.
So in Ghana now, you cannot leave.
Is that in Ghana now you cannot leave?
Unemployment.
Why unemployment?
Hey, the rate of unemployment, when you leave, you get another one.
Oh, it depends on who knows you.
If you don't know anybody, then okay.
So
nobody knows you.
If nobody knows you, you create work for yourself. Yes. If nobody knows you, create work for yourself. The small salary you have gathered, start mini importation. You get something small. Learn digital skills. I believe every employee should learn digital skills because you do not know when your job will collapse. And there's no way digital skills will not pay you. You get paid. Always.
Say that's very true, but the Ghanaian worker cannot save you.
Oh yeah, of course.
The salary it doesn't take us home.
Of course, it doesn't. I saw one guy. I asked him, what do you do in your organization? He said, I'm a customer representation executive. Ghanaians like big names, so. And how much is your salary? Oh, 850. I said, wow, customer representation executive. Say you are a teller. You see, we like big names. Even Gateman is claiming security. I believe in cash flow more than role. If I'll get the cash, I don't mind. Business is cash flow. The cash flow is important than the role. So if I'm getting cash flow, forget it. We prefer big roles rather than the small roles which you pay us big. Somebody gets a waste management company where he will have to be supervising those who are pulling the waste. You say it's a toilet business and reject 5,000 seats and go and sit in a bank and wear suits and take 1,005. That is the attitude of the normal Ghanaians. Ghanaians don't like to get their hands dirty. And that is why some of them are in some positions that they are in. But check the Nigerian man. He doesn't care. Even if he has to stay down to get there, he will. I think attitudes count a lot. So because of that, most leaders have the mindset that these people, even if we help them, there's not going to be any fruit. But not all individuals are the same though. But a lot of the youth have created that perception now. That is why a lot of unemployment in our educational system. People go learn theory, they come out and then somebody calls himself an accountant. You give him work. Even after training, still, he's not able to do it. And if you look at the ICA structure, for instance, you realize that we do little insurance and banking. Have you noticed? So when people get those roles, I mean, if you don't get better training, you start finding yourself wanting. Have you noticed? So students are used to sales, less cost of sales, operating profit, those kind of things. So you go and you see something out of the ordinary, they get confused because of how they were trained. I believe this is not the right thing. Instead of reducing the workload, try and bring different industries or partner with different industries such that when you finish ICA, at least you can just go and do 2 diets or 1 diet just to get an insurance certificate and add it. But they'll rather do CPDs and take money. I mean, these things can be changed. Do you understand? But anyway, it is God that is taking care of us. We'll all be fine. Let's just press hard and pass. CA opens doors. Amen. So these are some of the ways the cases come, okay? This is maybe an extract from a whole scenario, and then you have to think about all the possible things, which definitely the culture is within the organization, you know that. So this will now be a weakness because it is internal. Any internal problem is a weakness of the company. Do you understand? And mostly ICA likes companies which have been started by individuals because the culture is mostly rigid or family business. They have a rigid culture, and rigid culture is difficult to shake. Do you understand? Because they will not change. They are reluctant to change. So anytime there's some questions like that, there's mostly change management inside that question. Which I'm giving you exam mindset. So anytime you see rigid culture, there's likely that they'll be resistant to change. So change management will come in there as a question. Makes sense? Anyway. So there's one particular model I want us to look at. And then I think last night it came. I think now is one of the key models in your exam that you don't have to joke with, which is the culture web. But before we look at the culture web, we are looking at the Charles Handy's culture types, right? In Charles Handy's book, The Gods of Management, he proposed 4 distinct types of corporate culture, and each type represents a different approach to how power, roles, tax, and individual influence organizational dynamics. Okay, so these are the breakdown of the various culture types. You have what we call power culture. Okay. So in a power culture, power and influence are centralized, within one major source. Now, the central figure or group holds the majority of authority and control radiates out from this core. So Handy likens this culture to a spider's web, where the spider is the central power, controls the network of all the threads. So here we are saying that there's one person at the top and other people under him, right? So that is what we call power culture. So power culture, they have a centralized power. That is the central figure or group that holds most power or authority. Then the personal influence, that is the central power relies on personal charm and influence rather than formal structures. So Ron's business could be more of a power culture. Have you noticed? Everything is centered around one individual. True or false?
Very true.
True. Okay. And then there's a heavy reliance on trust and verbal communication rather than formal documentation. So you even realize that with Ron's business, I believe he will not document anything because even the organizational chart and stuff that the accountant came with, he tore it. Did you notice? So I believe he will be rather communicating to people rather than documenting things down. What do you guys think? Okay. Then challenges. As the organization grows, maintaining this centralized control becomes difficult because it can lead to inefficiencies if the culture is not adapted to accommodate growth. Okay, so if it doesn't accommodate growth, it can be a problem. Now, typical settings. Now, it happens mostly in small entrepreneurial organizations that are often found in startups or small businesses where the founder maintains tight control. And there could be efficiency issues. So it's less effective in large organizations where centralized control is impractical. So in simple terms, who can summarize power culture for us? Power culture, what does it mean? What does this culture type mean? Yes? In your own words. That's why I always ask you, in your own words, what does it mean? Power culture. Oh, power culture. Okay. Let's continue. 2 is role culture. When we talk about role culture, this is a type of culture which is characterized by a clear formal organizational structure, okay? So the first one will be mostly in an entrepreneurial setting where there's one boss and staff under him. But role culture happens mostly in departmental organizations, right? A type of organization where there are hierarchies like finance, marketing. So a formal organizational structure will define roles and responsibilities. Now, each individual's job is outlined in detail and the structure is hierarchical, like the way I showed you, right? So it goes mostly with the formal or the functional departmental structure, right? So the characteristics is that for a role culture, there's always what? A hierarchy. So the organization resembles a pyramid, which clearly defines roles and levels, and they are formal communication, right? We use formal methods of communication like emails, memos, reports, meetings, organizational charts, and the rest, right? Then there's stability. It's typically suited for stable environments where rules are well-defined and innovation is less critical, okay? Then people are managed through their roles rather than being led by inspiration, okay, or vision, because this one, you follow a set tone within the organization. And typical settings include large, stable organizations, right? So this is common in large organizations with predictable environments, such as government agencies or traditional corporations. The third one is what we call task culture. Now, in task culture, the focus is on achieving specific tasks efficiently and effectively, right? So the teams are formed based on tasks at hand and can be reconfigured as needed. Okay, so with this one, what happens is that we focus on what we want to do rather than the whole organization. So we will form a team to say, okay, this team, we are going to build the new ICA app, right? So they may be from different backgrounds, but the whole thing is about the task at hand. So there's flexibility because teams are created and dissolved as tasks and projects change, because it's like project managers, they don't have a home. So sometimes when you're working as a project manager, it's interesting because every project you meet new people, new ideas, new skills, okay? Just that sometimes you miss some people that you meet because some people are from different parts of the world and other things, but it's fun. You get to see all different people and their culture and all that, right? So with something like tax culture, it could be used in project-based organizations. So the teams are created and dissolved as the tax and projects change. And it's knowledge-based authority, right? So respect and authority are derived from expertise and skills rather than from formal positions. So there are some practice. I've seen this medical practice where everybody works as independent, right? The dentist is independent. You see that they all do their own thing. So it's an example of tax culture, okay, where they are all brought together to do a specific task within a particular place, okay? So it's based on the knowledge or the specialization that they have. So mostly audit firms, you see that, right? You see this guy is a tax expert. You see this guy is focused around this, right? Yes, but we'll see an organization where everybody else is just a professional. Are you getting it? Okay, but this one is mostly on the tax at hand. Then there's problem solving. The emphasis is on problem solving and addressing challenges in a dynamic environment. Then we have leadership. So individuals are led by what? Team members rather than managed by rigid structures.
Recording in progress.
That this one can be used mostly in what? Project-based organization. Industries like IT, consulting, or development, where what? Tasks frequently change and require flexible team arrangements. The last one is what we call person or existential culture. So we call it person culture. So in person culture, the organization is structured around serving the needs of an individual or small group of individuals. So the central figure of figures are the focal point and the organization exists to support them. So this one, just like the way we saw the first one, right? The central management and control. You realize that with this one, it's not just focused on one person, right? Like the way we saw in the power culture. Okay, like the way we saw in the power culture, but a group of individuals, okay, they become the focal point. Without them, the organization cannot work. So the structure is designed to cater to the needs of central individual or group, and there's a supportive structure. So the rest of the organization revolves around supporting the central figures, okay? And it's rare for the organization entirely, are you getting it? But it may be seen in some parts of the organization, particularly in maybe sport or entertainment industries, where there's a key player within the team and everybody follows his lead. You get it? Is that okay? So this one, the reason why we call it person culture is that it revolves around the person, who may not necessarily be a central figure, but each person has particular roles they are supposed to play. Does that make sense? Does that make sense? Hello? So according to Charles Handy, how many culture types do we have?
Power.
Four.
Four. Mention them.
The power culture,
Power culture,
the role culture,
role culture,
the tax, and the person. Oh, shh.
Person or extension.
and then we have what? Person or existential, right?
Yeah.
Culture. So what does power culture mean in your own words? Power culture. Okay. Nobody wants to talk. Let's go to the culture.
Power culture is when there's only one major source of power at the center of the organization, like how Mr. Ron was behaving.
I'll take it. Now, let's look at the culture web model, which is a significant model for all case study related courses, right? The culture web, whether ACCA, whether CIMA, whether ICA, whether CPA, the culture web is always one model that you can never ignore, right? Almost every exam, it can become part of an A part of a question or B part or any question. So you don't joke with the culture web. Now, the culture web model, which was developed by JSW, Johnson and Schools, in their book, Exploring Culture, Exploring Corporate Strategy, right? That book, you need to read it. It's very good. It will give you more insight. Now, it's a framework for understanding the complex elements of an organization's culture. It explores how various cultural elements interrelate to shape an organization's paradigm. The shared understanding that influences your employees' perceptions and behaviors, right? So here's the detailed look at the 6 interrelated elements. Now, the paradigm is not necessarily an element, but it is something that is important. You cannot do away with the paradigm. The paradigm is the things that you do without knowing that you are doing them, right? But you consider very dear to your heart. Do you understand? So the first is the rituals and routines. So routines and rituals represent the detailed ways of doing things within an organization. And they encompass the daily practices, habitual procedures, and the norms that guide behavior. So looking at Ron's case, what were the rituals and routines within the organization? Let's think about them. Ron, rituals and routines. Did we see some rituals and routines in Ron's case?
Yeah, people are not given the assigned tasks. You work at any place at any time.
Okay.
And anywhere.
That rituals and routines we saw.
Then he comes to work as early as 8 o'clock to inspect. Then he comes at 5:30 to inspect those who went home early.
Okay. Like
Then
people are not giving leave.
Yeah.
Okay. And people go file his returns and do other things for him and his family. Okay, we saw all these things, right? So what are the characteristics of rituals and routines? Mostly, we are talking about established practices, like including regular meetings, standard operating procedures, and common methods of interacting, right? These routines reinforce the existing culture by maintaining consistency in how things are done. And employees may find it challenging to adapt to new methods if they are deeply ingrained in the organizational culture that they are already doing, the rituals and routines that they are used to, right? So examples, daily team briefings, annual corporate events or celebrations, standard work procedures. Now, 2, we have stories and myths. Stories and myths convey the history and values of the organization, and they are often communicated informally and help shape the collective memory and identity of the company. So what are the characteristics? 1, they reflect on key events or figures that are significant to the organization's history. So we saw the story about how Ron wanted to be in the Navy, right? That could be one of the things that guides why the man is so strict, like the Navy. Then reinforcement of values. These narratives can reinforce organization's culture by highlighting what is valued or esteemed. And then it can have an impact on change because challenging established stories or myths can be difficult because people have it in their mind that this is a Navy man and it will be difficult for him to change, right? Making it hard to instigate cultural change. Do you all agree? Now, what are the examples? Anecdotes about the company's founding, tales of pivotal moments in the history of the company, about influential leaders or what? Achievements within the company. Then we can have symbols. Okay, so symbols are the physical manifestations of the culture of the company and its values. They serve as visual representations of the organization's identity and ethos. Okay, now we can have what? Representation. They can simplify the organization's status, values, and culture. They help employees identify the organization and its values, and symbols can influence how people perceive their role and organization priorities. So example is the logos of the company, the office design layout, the dress code, corporate gifts, and how things are positioned, like your websites and all that. They are all symbols of the company. Even the cars people use, you go to some organization, you see some particular type of cars being used there. Okay, they are all examples of symbols. Power structure. Okay, it dictates who holds power and how power is distributed. And this influences decision-making and overall dynamics within the organization. So it can be centralized or decentralized, formal or informal. And those in position of power influence organizational culture and policies. Okay, shift in power can lead to changes in the culture and change. Are we okay? So example is top executives and their influence, like the case of Ron, key decision makers, influential informal leaders. Then we have the organization structure itself, which is a feature of the culture, right? Now, the organization structure defines how roles, responsibilities, and authorities are distributed. It affects how work is organized and managed. Okay, so the characteristics is that the levels of the hierarchy and reporting lines within the organization, are you getting it? It has hierarchy. It can be hierarchical, flat, matrix, whatever, whether it's a tall or wide or flat organization. And it affects your ability to adapt to change and innovate if people are used to that structure. Okay, so there could be traditional hierarchical structures, flat or decentralized structures, or matrix management structures. Then we have the control system, which includes how we assess performance, reward people, and what other systems are put in place and considered important within the organization. So we could have what performance metrics, like what gets measured and rewarded. Are you getting it? To employees. How does it affect their behaviors and priority? Can we reinforce certain behaviors or focus areas like profitability or customer satisfaction by giving people incentives? How does it influence our culture, right? It can drive cultural norms and expectations within the organization. So examples could include bonus and reward systems, performance appraisal, key performance indicators, right? So there are some particular things that we have to look at. As I told you, all these things have an influence in the paradigm. The paradigm is what we consider most important, right? But when it comes to culture, for global companies, there might be some challenges, you know that. So first of all, there might be diverse cultures. So global companies operate.
Hey, who is this?
There can be challenges for global companies, right? So there are diverse cultures. You know that global companies they operate across various cultural contexts, and thus it makes it challenging to impose a single corporate culture and the ethical framework, right? And there may be consistency and flexibility. Now, balancing the need for a consistent corporate culture with the flexibility to adapt to local practices and norms, I get it. It's one of the problems that they face. And there could be ethical standards. Like there can't be a uniform set of ethical standards. You go to some places, the way the ethics work is different from Africa, right? Which can be difficult when local customs and legal requirements vary. So there will be inconsistent standards within that global company, right? So you can get a case where they'll tell you that, oh, this is a global company. What are the implications of their culture, right? Definitely you know that there will be diverse cultures. Sometimes there will be inconsistency, flexibility should be considered, ethical standards, right? So what is the approach that we use to deal with this? Local adaptation. So we can adjust our policies and practices to accommodate local cultures while maintaining core corporate values. And we can also have global standards like what are the overarching ethical guidelines that reflect universal principles, but it can allow for local interpretation. Okay, so we can either do local adaptation or we adopt a global standard to some parts of our organization that we can adopt, right? So you remember we talked about the paradigm, and I said that it represents a core set of values, beliefs, and practices that define your culture and your operation. So this is the lens through which employees and stakeholders can understand and interpret your actions and decisions. So it's taking for granted assumptions, things that you hold dear to your heart. You do without noticing you are doing them. Okay, and this is the when it comes to culture, these are the models that now ICA will be examining you on. So looking at Ron's case, if we are to apply the culture web, okay, so for instance, if I take symbols, you can see organizations are represented by symbols such as logos, office, dress code, language, and titles. Symbols as frigates include or they indicate how the managing director wishes the company to be perceived and run. Like Ron's nickname, the commander. You guys remember? The use of naval terminology, the naval-inspired name of the company, right? Now, Ron's motor cruiser is the main symbol of his success. This is an example of symbol. So you see how you analyze from the case. Power structures. They look at who holds power. So answering cases, I have this model, which I call P. If you use it, you will always be fine. So always you take the point. So this example of the point, right? The next thing is explanation of the point. Explanation is a theory around it. What does the point say? So you see, after taking symbols as my topic or my point, the next thing was to explain what symbols mean. So this is the explanation, right? So the next thing is to what? Give evidence. So evidence or application, right? So evidence or application to the case. Apply to case. So this is where you pick issue from the case and relate it. So every case study that you see on this F, this is the approach we use. What is the point or the topic? What is the explanation of that point? What does it mean? Then finally, can you relate it to the case, just like you saw? So I explained what symbols meant, right? Then the next thing is to take what symbols from the case, which is what evidence. So P, point, explanation, evidence, or point, explanation, and application. Is that okay? So you go to power structures, you see I explain what power structures are. So point, explanation. So power structures look at who holds the real power within the organization. At Frigate, power comes from one person, Ron, whose leadership style is based on a strong opinion and beliefs. We saw this. Organizational structures. The structure of the organization reflects the power structure, right? And there's little formal structure at Frigate, and the attempt to install a formal organization structure failed. Who installed the formal organization structure and failed? In the case,
Accountant.
the accountant. She was even sacked, right? When she was trying to do
Yes.
better. So some of these things, you can bring them out to get more points to talk about, right? Then the control systems. Organizations are controlled through a number of systems, including financial systems, quality systems, reward systems, and the areas that are controlled closest indicate the priorities of the organization. We saw that. Now, the focus in Frigate is on cost control, and the emphasis is on punishment, like wage deductions for being late rather than reward, okay? So there are few formal process controls at Frigate, and the attempt to install such controls was heavily resisted, including the sacking of the accountant, right? Rituals and routine. The daily behavior and actions of the staff signal what the organization considers to be acceptable, expectations and management values. So at Frigate, there is one rule for the managing director, flexible hours for him, extended holidays, and another for everyone else. Minimum holiday, no flexibility, wage deductions for arriving late. So these are its rituals. And we could see this from the case, right? Then we come to stories. The people and past events talked about in an organization can illustrate the values of the organization and the behavior it encourages. Stories at Frigate relates to the managing director as the commander. He is the hero of the organization who constantly has to deal with numerous villains like lazy staff, poor quality suppliers, customers who delay paying, the tax authority, the society in general who believe all need.
Tablet in
So you saw that this man believed he's a hero in his own story, right? Where he has to face lazy. He alone believes he's perfect. Like people are bad. People are always trying to dupe him. The tax authority is stealing his money. So to him, those are the stories, right? And then the paradigm, which signifies the basic assumption and believes that an organization's decision makers hold in common and take for granted. So it summarizes and reinforces the rest of the culture web. And the paradigm at Frigate shows a company run for personal gratification of the managing director and his family, and Ron believes that his family, his lifestyle and benefits are the reward for taking risk in a hostile environment. So that is what Ron believes. Are we okay? So exam support, how do you use the cultural web model? Now that you know a bit more about it, how do you put the cultural web into practice? It is best used when it starts by looking at organization's culture as it stands. Okay, that means running through each of the important elements and aligning it with how the company currently operates. Then you need to think about the culture that you want your organization to have. While this may encompass some things you've already mentioned, the idea is to skew it a bit more aspirational when it comes to your corporate culture. Now you have to determine the difference between the two. Where are you succeeding? Where are you lacking? As I told you, identify where there are problems and how can you make up the difference between the two. If you can do this, there's no exam question that you cannot answer. Is that okay? Any questions so far? There was only few people talking, so you are making me tired. I thought it would be very interactive. So, what have we learned so far? Plenty things, eh? Yes. So if you don't want to talk now, I'll ask questions. What are the key drivers of strategic objectives? What are the
shareholders maximization?
Shareholder maximization. Wealth
Then balance scorecard,
balance scorecard.
risk appetite,
Risk appetite.
then
Laws and regulations.
laws and regulations.
Okay. What is risk appetite?
Your attitude towards risks.
Is that only the attitude towards risk? Risk appetite has some components, right? Usually your attitude towards risk and your capacity, right? How many types of risk attitude do we have? We looked at all that. The types of risk attitude. So we mentioned them. Risk seeking, risk aversion, and risk neutrality, right? Okay. What considerations do we have for risk appetite? Risk tolerance, risk aversion, and also okay. Nice. We said something about laws and regulations. What did we say about laws and regulations and strategy? If you want a strategy to be successful, you must constantly comply with laws and regulations. Now, my next question is, what is the implication of organizational culture for multinational companies?
Okay.
Yes. Implication of organizational culture to multinational companies. Oh, we discussed this. We said there might be diverse cultures. Oh,
There must
Yeah.
also be flexibility. You
Then
can adapt
Then consistency versus flexibility.
yes.
flexibility. Yeah.
And what else did we look at?
Then ethical standards.
Yes, they may differ across different boundaries, right? But we can put something in that can check this. We can do local adaptability, right? Where we adapt every place and its own culture. And then finally, we can also institute global standards, right? Where globally, we'll have some particular parts of our multinational organization which has specific cultures. Are we okay? Okay, so
Please,
these, the financial models that you wrote, I made you write. I believe you said 30 major topics, right? Don't wait until we get to financial management. Start. I told you to get the ICA manual. Start. Those are the models. This that I've already highlighted some things that will be coming. If you don't look at them, you go and you will not make it because now the finance is heavy. Though they write it small, it is very heavy. I beg you. You will make it. But these are new things that in the old syllabus, they were not like the focus was not so much on them. Now the focus is so much on them, right? But I believe it was a wonderful session. Though your interactivity was low. I don't like case study. It's called case study because we discuss. It's not teach, make a lesson. We all share ideas, right? So I believe it was a wonderful session. That brings us to the end of this session. All right. Have a good night.
So when is the next meeting?
I have class on Monday as usual. Monday.
All right. Sir.
Monday, time, please.
6.
6.
So what about your premium class? When do you normally have it?
Oh,
Or there's nothing like
the premium class for no, because I had an agency in the morning. This is their time that you guys have enjoyed. So premium class is Saturday evenings. And that one is it's very stressful. It's a very stressful class. So if you want to be stressed to pass, then you can join my premium class. All right. Have a good night.